macro predictions and forecasts and how rarely one should use them. And so I was particularly struck when I was reading one of your memos and you were talking, I think it was probably Taking the Temperature from 2023, where you were talking about those 5 very successful market calls, which really are not even over 50 years. They're actually over the last 25 years, I think in 2000, then 2004 to 7, 2008, 2012, and 2020. Can you explain the nuance here? Because I think it's really important, right, that there are times where the market is sufficiently crazy that you've actually sort of jettisoned your usual disdain for macro forecasts. I guess it's just that the odds of you being right about it being so extreme have been better. Can you talk about unpacking that kind of nuance there?
Well, number one, I think, as you say, there were 5 times. Essentially, you say they're all in the last 25 years. So what that means, it took me 30 years to get up the nerve and feel that I had enough insight to make a call. And the first one was the first day of 2000. It was about the tech bubble. And the second thing that's worth noting is that I didn't know anything about tech stocks or technology or the internet or any of those things. And I call the process taking the temperature because what it is, it's about assessing the behavior of the people around me. You know, Buffett always says everything best. And he said that the less prudence which others conduct their affairs, the greater the prudence with which we must conduct our own affairs. So when everybody is behaving like they're carefree, not a worry in the world, there's no risk they don't think they can surmount, and anyway, they don't see that many risks, then we should run for the hills because their exuberance has probably moved prices so high that it's dangerous. And then in contrast, when people are depressed and they can never think that there'll ever be another positive step or another up day in the market and all they want to do is get out and they've had it, all that stuff, their pessimism and level of depression usually renders things so cheap that that's the time to become highly aggressive. It's called contrarian. It's called countercyclical. I think that, as my son said, 5 times in 50 years, there were compelling times to do it. Times when the logic was compelling and the probability of being right was high. And so we made the call. We took action. I can tell you that I never did it without trepidation. As Mark Twain says, I was never certain, but it felt like the right thing. And so it was worth trying. But, you know, in the investment business, even when you think you're right, you shouldn't assume that it's more than 80-20. And maybe it's really 70-30 or something like that. But if you know what you're doing, it's worth trying, but nobody gets it right all the time. And by the way, I always say, William, if instead of 5 times, what if I had tried to do it 50 times or 500 times? Or I think about the fact that after 56 years, you multiplied that by 365. So I'm approaching 20,000 days of my working career, if you count the weekends. And what if I had made 5,000 calls? Made a call every 4 days. What if I said, every 4 days, I got to either say buy or sell? I think that my record would be 50-50 at best. So you just can't do it all the time. You have to wait until it's compelling and then pray